JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 9th of December 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at yesterday, of course, just to see how everything's getting along. But yeah, before we do that, as always, guys, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts. Now the first one I want to pick up here is Nikkei 225, guys, and well, the index is popping higher. It's moving nicely to the upside. However, today it remained still below this 26,890 territory, which I've talked about yesterday. So basically, of course, all this is kind of raising that positivity in the air again, but in order to get a little bit more comfortable with that idea, with that upside idea, we would need to see a nice, good, strong push above the 26,890 zone. So keep your eyes on this one. Of course, and if that gets broken, then my next target is this one right here, and probably for that, I would need to jump back into a monthly chart, yep, basically the 27,251 territory. That's what I'm going to be looking at after, and yep, that's the lowest point of April of 1990, and of course the highest point of 1991, guys. So yep, that's where we are right now. We are at a very interesting spot, so let's see if we can overcome this this previous high here. And yeah, this current highest point of December, I would say, and then yes, then we'll aim for that 27,251 zone. Now jumping into Shanghai Composite, and the index on the contrary declined here, and we saw this one drifting back below this area, below this 3,387 territory. Now I talked a lot about this level because what I was saying, that if we get a drop back below it and we see the price kind of staying below this 21-day EMA together with this 3,387 zone, then yes, lower levels could be met, guys. But at the moment, be very careful. My next target is this little level right here, below the 26th of November at 3,344 mark, and then yeah, we'll take it from there. But at the moment, guys, it's not really looking good here for Shanghai Composite. It's drifting lower. Let's see how today's European and US sessions will end up being, because again, maybe those will start reversing to the downside. However, yesterday we had a good rally in both indices, in both kind of markets, Europeans and the European and the US one. So yeah, let's see how it's going to play out today, but yeah, be very careful, guys. At the moment, the technical picture on Shanghai Composite is a little bit more towards the downside, because we've stayed below this 3,387 territory and this 21-day EMA. Now, jumping into the German DAX, as I said yesterday, it had a bit of or I should say, it remained in the positive territory. It stayed above this 13,213 territory that I keep talking about, although we did get a brief overshoot here, but yep, it reversed back back to the upside and remained in positive territory. Now, if we look at the cash index and where the price of German DAX is trading right now before the market open, we'll see that the price is currently sitting at around 13,333 territory. So basically slightly above yesterday's close, so but below this 13,347 mark. That's, if you remember yesterday I said that in order to aim for some higher levels I would like to see a break above that area first. Jumping into DXY, the index here, it drifted lower, and today it drifted lower. Yesterday it pushed a little bit to the upside, but failed to kind of move further north. Today we're seeing a reversal here, back down. However, as long as it stays in this little territory right here, I'm going to take a bit of a neutral stand, because for me, preferably, in order to aim for some lower areas, I would like to see that daily candle staying below the 90.59 territory, and then yes, lower levels could be met. We could then target the 89.96 level or even below that, but at the moment, yep, it is how it is, guys. Of course, the trend is still to the downside, but we need that confirmation drop below the 90.59 territory. Gold is, of course, or not, no, I wouldn't say actually of course, but gold had a good run. Gold is still trading above this 1849 territory, which we managed to break nicely. If you remember, I was saying that if we get a nice break above it, if we get this daily candle remaining above this area, above this 1849 zone, then yes, higher levels could be met. At the moment, you can see that yes, we made a push higher. My next target was the 1899 level, or in a way we could round it up towards the 1900 zone. But as you can see right now, we're seeing a bit of a move lower. However, at the moment, if the price remains above the 1849 zone, this little move lower could be seen as a temporary correction, guys, so be very careful with that one. Now, US oil, which is WTI oil, and here the commodity it continues to struggle to overcome this, or should I say, struggles to stay above the 46.24 zone, because it keeps getting these little overshoots, but yep, it cannot really close above it. So we need that close in order to aim for some higher levels. At the moment, I'm neutral. I'm just observing the price action, because even for the downside, I would prefer to wait for a drop below the 43.75 territory marked by the highest point of August here. So keep your eyes on that one. Bitcoin. So Bitcoin, I talked about this one on Monday, and basically I was saying, guys, we were looking at a 4-hour chart, and I was saying keep your eyes on this little triangle pattern. So we need to see a violation of that, one of the sides of that pattern, before kind of considering the next short-term directional move. So as you can see, looking at this 4-hour chart, we can see that yes, we've had a break of this lower side of the pattern, and also what I would mention, that I would like to see also a drop below the 18,500 zone right here, which also coincides with the 100 EMA here on the 4-hour chart. So we had a nice drop below it as well, and in a way now it kind of opens the door for a possible test of this 200-day EMA on the 4-hour chart. Don't forget that, and then we'll take it from there, guys. But at the moment, yep, everything's kind of leaning a little bit more towards the downside, as you can see here on the daily chart as well. We can see that the price is trading currently below the 21-day EMA, and if it stays below that, well, maybe this could lead to a bit of a move lower, guys. So be very careful on that one. Jumping into a few pairs now, Aud Jpy. So in terms of economic data today, let me just quickly double check that. We do have some Canadian numbers, guys, today. So so yeah, let me just bear with me one moment. So we do have a bit of data coming out today from the US and then from Canada as well. So from the US, we do have the job openings number, and then from Canada, we do have the BOC rate and decision. So Bank of Canada will deliver its interest rate. Of course, for the moment, there are no expectations there, but I'll jump into the Canadian pairs, Canadian dollar pairs in a moment. But here, for example, at the moment, the Aud Jpy, I mean the so-called kind of risk sentiment pair is kind of showing that markets are in a way back into a risk-on environment. It seems like that, especially looking at this nice reversal here to the upside. Now, if you remember when I was covering Aud Jpy, what I was saying that if this upside line gets broken, yes, it increases the chances for a further move lower. However, that's the reason I had this area highlighted here near the 77.10 zone, because I needed to see a nice good drop and a daily candle staying below this area in order to go for some lower areas. As you can see, we did get these little false breakouts, but we didn't really get that daily candle remaining below this area. So, and that's, you can see that this area kind of acted as a good plateau for a nice reversal back to the upside. So first of all, we can get rid of this upside line, no longer valid. Now all focus is on this 77.74 territory marked by the high of the 10th of September. That's my next target. I do understand we're just kind of a few points away from it. Nevertheless, I want to see how it's going to perform, because if it provides decent resistance, guys, then yep, one should be very careful with this, and yep, we could see maybe a bit of a correction here back down. However, if we get a pop above this area, my next target is the highest point of August near the 78.46 level. Now, NZD CAD. Now, this is where I said that I'm going to jump into these Canadian dollar pairs soon. So, NZD CAD, you can see that it's moving back up here. The Canadian dollar is basically weakening a little bit right now against the New Zealand dollar. I mean, but basically that's mainly driven by the commodity-linked currencies, or I should say the risk asset currencies here, like NZD and AUD. Basically the two commodity, these heavily commodity linked currencies like NZD and AUD are pushing nicely to the upside, again showing that risk on environment seems to be back on the table. Now the question here is, can it push further? Can this pair NZD CAD push further north? Now, if you remember yesterday, I talked about this hurdle right here, the 0.9045 territory, because I need to see that daily candle remaining above this area in order to get a little bit more excited with the upside. So yes, we are doing a nice good move right now. However, I want to see if this area is not going to end up being just a nice area of resistance. So that's why for now, probably be very careful, guys. And of course, keep your eyes on today's Bank of Canada interest rate decision, because maybe the Canadian dollar could strengthen here, and we could see this little movement here as a potential bearish flag pattern, guys. Don't forget that as well, because we have a nice pole here, upside down pole, of course, but nevertheless a pole and a potential bearish flag. But that's the reason why I'm saying that don't for now wait for the next move, wait for the data to come out, and then yep, we could see what we can do with it. I'll pick up on this later on in my trader's tea time, just to see how everything is getting along. But as I said, guys, if you want to aim for some higher levels, probably wait for this daily candle to remain above this 0.9245 territory today. But if you want to aim for some lower areas, well, probably just to be on a safe side, a drop below the 0.8987 territory right here could do the trick for more sellers, because at the same time, this would confirm a forthcoming lower low. Oh, excuse me. There we go. So USD Cad. So you can see the Canadian dollar is slightly stronger against the US dollar at the moment, and that's why I'm saying that with NZD Cad, if somehow NZD gets a little bit weaker, Canadian dollar could take the steering wheel here and drive this pair lower. So this is what it's doing right now with its US counterpart. Now the big question here is, can we actually move a little bit further south? I talked about this pair recently, and my target is the 1.27. This one right here, I can see it, 1.2730. That's basically the low of the, is this the lowest? That's the lowest point of May of 2018, guys. And then we'll take it from there. So for now, like I said, yes, the trend is still to the downside. You can see that. So yep, I'll target this 1.2730 territory. I do understand it's only like a few, let's say 60 pips away, but nevertheless, 60 pips is 60 pips. So yeah, guys, for now, like I said, be very careful, of course. Don't forget that something might happen and we could see this one reversing back to the upside. But for that, if you want to keep your eyes on the high of yesterday near the 1.2826 level, that's maybe for today basically. If we get a push back above this area, then yep, we could go for a bit of a higher move here towards this downside line for a bit, basically for a larger correction to the upside. GBP-CHF, quick update here. So quick recap of what I said previously. Now, previously I told you guys to keep an eye on this upside line, because if it provides good support, we might see a nice rebound here back to the upside. Well, as you can see, the rebound didn't really quite happen. Instead, we had a break below this. Yesterday, we saw the daily candle remaining below this upside line, and today, yep, the rate is struggling to get back above this upside line. So, in the moment, basically everything's kind of leaning a little bit more towards the downside, but that's the reason why I had this area right here, the 1.1788 zone, 1.1799 territory, or in a way you could round it up towards the 1.18 level, as the potential kind of breakout point for the downside. So anything up until here, I'm still going to be, let's say, cautiously bearish, but even maybe more to neutral. But if we get a drop below this 1.18 territory right here, then yes, I'll aim for some lower areas. If the pair somehow manages to push back above this hurdle right here, the 1.1912 zone, this one right here, then yep, I'll aim for some higher levels. I'll aim for now let me just adjust actually a few levels right here, because this one's no longer valid. I'm going to aim for this little target here, the 1.1985 territory, marked by the low of the 12th of November. But if that gets broken and we see the rate climbing further above this 200-day EMA, then of course my next target is this one right here, the 1.2154, and then I'll take it from there, guys. For now, that's the kind of game plan. But if you want to aim for some higher levels, like I said, wait for a move at least back above the 1.1912 zone. EURUSD. So I talked about this one, guys, and from the beginning of this week I told you to keep an eye on this one, because this could be forming a possible bullish flag, and I've mentioned this yesterday as well, before this up move, and you can see, well, that's working out nicely so far. However, also what I've mentioned with this idea that although we see something like that, if we see a nice good push higher, still I would prefer to wait for a push above the 126.46 level right here, marked by the high of the 10th of September, because at the same time, I mean, this break here, if we see the daily candle staying above this area, then yes, I mean, this could kind of strengthen the scenario, the upside scenario, and we could see this one pushing towards that 127.08 level, marked by the highest point of September. So that's my next target. But at the moment, guys, be very careful here. Yes, we had a good push higher this morning. Great news. But yeah, we need a further move above this 126.46 level in order to get a little bit more excited with the upside. And finally, EURUSD. So Similar story here. The pair is pushing higher. Yesterday, it did have an attempt to move north. It did so, but it kind of quickly got pushed back down. However, it still remains well above this 1.2055 territory. I spoke about this level previously. Now we're seeing a nice good move this morning towards this 1.2155 territory. However, in order to aim for some higher levels, the same story as with EURUSD, we need that daily candle staying above this 1.2155 territory. So let's keep an eye on this one, because what I don't want to see here is another false breakout, basically. The ones that we had here last week and in the end of last week, and then on Monday as well. So be very careful with that one. So guys, that's the kind of game plan here. Let's keep an eye on some of these levels. It could be quite an interesting day today. Of course, for everybody to keep an eye on the Brexit news, Brexit developments. So far they're not really going well, and if that's going to remain the case, then well, the pound could stay under selling pressure. But yeah, if something comes up positive, depending of course on the strength, on the kind of significance of the positive news. I mean, it could be one-off impulse. Guys, don't get caught up in that, because if there's still no solution, then if there is some positive headlines coming out, then yes, we could see the pound kind of jumping against its major counterparts, but it might fade away very quickly. So keep that in mind. So yeah, guys, right, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you enjoyed this video. I hope you liked it. I really appreciate you joining in, guys, and I really appreciate your time. So if you want to catch my video later on, my traders tea time is always 14:15 GMT. For now, have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.